Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on US Bancorp, one of the largest commercial banks in the United States, offering a wide range of financial services including consumer banking, corporate banking, and wealth management. US Bancorp has a strong reputation for stability and customer service. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
US Bancorp has been a key player in the banking industry for years. From a behavioral finance perspective, how do biases like the status quo bias and loss aversion influence their decision-making, especially in areas like customer service and risk management?
The status quo bias is particularly relevant to US Bancorp's approach, especially in how they manage their customer service and risk management strategies. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. US Bancorp leverages this bias by focusing on maintaining and enhancing their established banking services rather than radically altering their offerings. This approach ensures that they provide consistent and reliable services to their customers, which is especially important in the banking industry, where trust and stability are paramount. Loss aversion also plays a significant role, particularly in how US Bancorp approaches risk management and investment decisions. Loss aversion refers to the tendency for people to prefer avoiding losses rather than acquiring equivalent gains. In the context of banking, US Bancorp might prioritize conservative investment strategies and rigorous risk management practices to minimize the risk of financial losses, especially in times of economic uncertainty. This cautious approach helps protect their capital base and maintain customer confidence, which is vital for sustaining long-term growth.
And this focus on leveraging the status quo bias and loss aversion has helped US Bancorp maintain its leadership position in the banking industry, appealing to both customers and investors who value stability and prudent risk management.
Exactly. US Bancorp's strategic use of the status quo bias in maintaining their core banking services and loss aversion in risk management appeals to investors looking for a company that balances stability with cautious growth. However, this approach also means that US Bancorp must carefully manage the risks associated with market changes, regulatory shifts, and technological advancements, particularly as the banking landscape continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at US Bancorp. As a major player in the financial services industry, DEI is particularly important for US Bancorp. How does this intersect with behavioral finance?
US Bancorp's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, customer satisfaction, and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance US Bancorp's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows US Bancorp to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the financial services industry. For investors, US Bancorp's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help US Bancorp build stronger relationships with customers, employees, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like financial services, where the ability to foster inclusivity and customer trust is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, US Bancorp not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, US Bancorp operates in a highly competitive and technologically driven industry. How does the company adapt to changing financial trends and customer expectations, and what role does behavioral finance play in this?
US Bancorp's strategy involves continuously adapting its banking services, digital platforms, and customer engagement practices to meet the evolving needs of consumers and businesses while maintaining its focus on stability and risk management. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with technological advancements, regulatory changes, and shifting consumer preferences. US Bancorp's ability to understand and respond to new financial trends such as the rise of digital banking, the demand for personalized financial services, and the integration of fintech solutions allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, US Bancorp can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the financial services market.
And this adaptability is essential for US Bancorp, especially as they face competition from other banks and fintech companies and the growing demand for more personalized and digital banking solutions. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. US Bancorp's focus on understanding financial market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the banking industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in customer expectations, technological advancements, and competitive pressures.
Now, let's compare US Bancorp to other companies in the banking and financial services sectors like JP Morgan Chase, Wells Fargo, and Bank of America. How do the behavioral finance dynamics differ?
US Bancorp's dynamics are often compared to other banking giants like JP Morgan Chase, Wells Fargo, and Bank of America, particularly in their approach to customer service, risk management, and competition. US Bancorp's strength lies in its focus on stability and customer service, appealing to investors looking for a company that balances operational excellence with prudent risk management. JP Morgan Chase, with its broad portfolio of financial services and emphasis on innovation, appeals to investors interested in a company that prioritizes market dominance and digital transformation.
And unlike JP Morgan Chase, which focuses heavily on market dominance and digital innovation, US Bancorp's strength lies in its specialization in customer service and stability, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For US Bancorp, the focus on customer service, risk management, and market adaptability provides a unique value proposition in the banking industry.
To sum up, US Bancorp's approach to business is deeply influenced by behavioral finance principles, whether it's through their customer service strategies, adaptation to changing financial trends, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives US Bancorp's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.